Hey everybody, Boris Schloss for BK Force. Welcome to our BK Weekly Technicals for 11/17, 11/21. Where are the trades? Well, a really interesting week of trade today. As you can see with the closing that really I think surprised a lot of people who traded, because the euro dollar not only supported itself at the 2400 level, but then came up and short squeezed the hell out of everybody through the 25s. For the last about 10 days, we've been trading 24, 25 in the euro dollar as all of the bad news out of the Eurozone has basically been digested. The market is essentially in a wait-and-see mode, waiting for the Fed to come in. And today the news was actually relatively positive when we started the day, because U of M was better than expected. Retail sales were stronger. All of this basically suggests the U.S. economy continues to really outperform everybody else. Europe was just in the dumps. GDP numbers were very, very weak. CPI data is very low. But here's the interesting thing. At this point, almost everything that you see in the euro has pretty much been sort of priced in. In other words, all the negative part of the eurozone has been priced in all the way through 34s, down all the way down to 24s. We're down 1,000 points off the highs. And the decline in the euro all the way down to 120 is really going to be contingent on whether the Fed is going to move or not move on the interest rate front. So the interesting thing that happened today was that when you were looking at the U of M interest rate, inflation expectations, they were extremely low. Basically, price expectations on the consumer level have been very muted for quite a while. And if the Fed sees no threat of inflation anytime soon, it's going to err on the side of caution and basically not raise rates faster rather than slower. So next week we have the FOMC meeting notes. It'll be interesting to see if there's any kind of a change from that perspective. But the bottom line is the market took that to say, hey, you know, the Fed is not moving, so we're going to see if we can run the 25s. And once they run the 25s, just squeeze the hell out of everybody, because I think the market fundamentally was so skewed to the downside. It was so obviously shifted towards the dollar that any mild price movement against it really created a lot of short covering. Now, when you look at the chart, though, the short covering rally itself really dies out in the 26 to 27 zone. This is a major level of resistance. If we push a little bit higher based on whatever weakness we have in the U.S. front or some relative strength we have in Europe, if any further short covering, pretty much I think dies out in this 26, 27 level. So Euro still remains very much a sell the rallies mode. It's still very much a short on any kind of a push higher, and probably gives an opportunity here for late shorts to reload themselves into the 26, 27 level. There's little here that looks to surprise the market. What I mean by that is that unless you have some kind of exogenous shock that radically shifts the expectations for interest rate hikes out of the U.S., there's really very little here until the end of the year to believe that the divergence that we see between the Eurozone and the U.S. is not going to continue. That always, of course, can be the risk of shorting against this move, but I still believe that the better trade here is a short into any kind of a rally that we have. So 26, 27 probably would be a good toe hold to reload for a possible move back down to the 24s as the month progresses. Dollar yen, on the other hand, really blew out the numbers early in the session. We came very, very close to actually 117. The big move in the dollar yen, the end of the day, dollar yen decline was really sort of a profit taking in the dollar across the board. But the big move in the dollar yen here really now rests on this story out of Japan. And it's interesting. Most of the move in the dollar yen has really been Japan driven rather than US driven. And we obviously are waiting for the U.S. component to kick in to push us to 120. But the Japan-driven component of the dollar-yen trade has been very interesting, because the rumor all week long has been that Abe is going to call a snap election and that he may delay the sales tax hike, which is due next October 2015, further. Especially if the GDP numbers come in relatively weak. And they're coming out, of course, Sunday night, New York time, Monday morning, Tokyo time. And that's going to be an interesting tell as to whether dollar yen can actually create enough power here to move through the 117 level. Technically, the trade has been a little bit tiring. And today's flame out right ahead of the 117 certainly gives you some room for pause. It definitely makes you very, very wary to want to be a buyer here, especially given the flame out, unless we can take out the highs here, and realistically even probably take out the 117 before you want to join the move for a potential move towards the 118. It is definitely getting top heavy. We've had a huge move here. It's been a 1,000-point move the other way here for the dollar, so certainly some correction is due. If you do get a correction move here next week, let's say Abe, all of those rumors are denied, GDP is relatively okay, and there's no further Japanese component to the dollar-yen trade. Then the trade back down, a little bit of a profit-taking trade in the dollar, which could take us 26, 27 in the euro. Very likely could take us to maybe about 114 in dollar-yen as the week progresses. There's definitely a more than 50-50 chance here that we could have a dollar correction that could take us down. Pound dollar, on the other hand, has just been nothing but a disaster. BOE basically telegraphed to the world they're not going to raise rates for a long time coming. But having said this 56.55 level, very, very strong support level all the way out from 2012, 2011. And I think on a relative basis, ironically enough, after all of the selling that's happened this week, I think relatively the pound may have a little bit of a bounce back into it, which is why, like, if you're looking for, because all the bad news is done. We do have retail sales out of UK. We do have CPI. If those numbers are considerably weaker than expected, yes, we could see certainly 55 tested. But if they're sort of in line, I think after so much selling in the pound, you really have a chance here, perhaps even on the crosses, such as the euro pound here coming up against the 80 resist level, which is now presumably almost a quadruple top here. A really interesting short here against this particular level. A short that I would really hold all the way up to 81. In other words, I really, in order to be proven wrong in this short, I'd want to be holding against 81s here. So it's a scale-up short where you kind of short a little bit here, short at 25, short at 50, and if you're completely wrong, you just bust yourself out at 81. But I do think, given the layout here of euro-yen, come back down to the 79.50, 7900s, very much possible, and especially so if we can't even bust out beyond this 80.25, because it'd be a lower high and presents an opportunity to short against this. Looking at Aussie, which has kind of been very, sort of strong and weak at the same time. So the Aussie story here, it's getting a lot of benefit from carry trade flows because nothing else is going on in the rest of the world, so people are kind of flocking there to pick up yield. But at the same time, a little bit of concern about the commodity slowdown, but then the commodities kind of rallied at the end of the day today. Bottom line is Aussie just goes nowhere. It feels like it's an 86, 88 trade around here, but it does get the benefit of the play on the carry trade, and that makes it an interesting trade on the crosses. Pound Aussie was very, very weak this whole week. I think it probably actually another one of those things, not necessarily because I think the Aussie is going to get weaker, but I think the pound bounce could give us a little bit of a bounce back in the pound Aussie as well. I don't have the chart. I can pull up the chart here. Let me see if I can pull it up for you guys. It's taking its time to pull up. All right, we'll forget the pound Aussie. We'll move on to dollar CAD and everything else here. Oh, sorry. I want to zoom out. Okay, here's dollar CAD. Dollar CAD also getting the benefit of the of a little bit of a commodity rally here. 114 was definitely a big toppy area, but this 112, which was former resistance, now becomes really serious support. I don't think dollar CAD goes much anywhere. We don't have that much data on dollar CAD. It's a sort of a sideshow for the time being. And Kiwi also sideshow. 77 held very, very, very well again, but it's a 77.79 trade, really 77.80 trade. I think it's a range-bound trade. All the comms dollars to me are really range-bound trades, and in some ways kind of coming up to the top of their ranges. You really would have to have something remarkable happen. Oil rallying, gold rallying, market becoming a lot more enthusiastic about carrying yield into the end of the year for us to bust out through these levels. So in many ways, the range-bound trades, which now have testing the upper end of it, probably present pretty decent risk rewards to short into the top of the range with an 81 stop on the Kiwi. So basically, to sum up, the other thing that I kind of want to look at, which is here we go, which has really been a drip towards a very, very, very tough. I wonder why is this showing? I don't know how this shows. This shows a wrong low here on this particular share. We never broke the 120. I don't know why this shows a 120 low, but whatever it is, the bottom line is that Euro Swiss is really inching its way towards the 120 level, and obviously the critical question is going to be whether the SNB comes in next week and starts to intervene, or whether they let it drop below 120 and then perhaps wait and then intervene afterwards. The key thing here is that SMB has had enormous amount of credibility by holding the 120 level. So I think if the 120 level goes, it's going to become much, much harder and tougher for them to regain that credibility. And the market could really make a massive speculative run against this. We could flush all the way down to 119, 118.50 very quickly. The only thing they can do, I think, policy-wise, that would completely upend this trade and push it higher would be to offer negative interest rates. But politically, I think they're under really serious pressure not to offer it too soon because they have that gold referendum coming up before the end of the month. The key thing, though, is that the markets are not allowing them the freedom to breathe before the end of the month. There's no way I think this 120 stays until the end of the month and be defended. So it's going to be a very interesting game of chicken coming up next week. 120, I think, is going to be the big story aside from everything else, and in terms of rally, dollar coming back. So watching Euro Swiss, watching the potential of a dollar retrace, and a potential to get short all the anti-dollars at various levels, especially the euro in 26, 27s, maybe the COM dollars into the upper end of its ranges, and certainly. I know this may sound a little bit out of consensus, but I really, really like this trade for the week, which is shorting the euro pound into these levels of the 80s, all the way up to 80.25, 80.50, with an 81 stop out if we're completely wrong on the trade, as potential ideas for next week. Wishing you guys the best of luck, the best of trading. Boris Schlossberg, over and out.